Hey, how's everybody doing? So in today's video, I'm going to be breaking down the price action on ES. So lately the price action on ES has been pretty wacky, I guess you could say. It's just been really hard to read. So I haven't been a fan of the price action on ES as of recently in like the past week or so. But today was the opposite. Today was just a super clean price action, or it was just super easy to read. So I thought it would make a really good video to go over it, because these are the type of setups that you see me talk about before. When I say good setups, A quality setups, they usually they jump right out at you, right? They jump right out at you. There's not a lot of thinking. You know it as soon as they see it, boom. And that was the case today. And as I said, like the price action as of recent, it's the type of price action that makes me scratch my head. I go back and forth, and usually what that means is that you should be sitting on the sidelines. If you're scratching your head too much, if you're going back and forth too much, usually that means you should be on the sidelines. You shouldn't be doing anything. And days like today, where the price action just jumps out at you, it's like it's basically saying trade me, right? Those are the days, those are the setups that you wait for, that you're patient for, right? So that's what we saw in ES today. Now, daily chart, what are we looking at right here at the moment? Currently, we're operating within a bearish market structure. Clearly, it's consistently trending lower. It's consistently putting in lower highs. It's consistently tagging the lows. So we're operating within a bearish market structure on the daily chart. Now, on the 4-hour chart, we have a point of interest on here. We have a larger time frame level, because remember, what I consider a larger time frame, 4-hour and up. So 4-hour, daily, weekly, monthly. You get the gist. Those 4-hour and above are your larger time frame levels. So we actually had a larger time frame level this morning that we had ES come up into, right? So I'm going to pivot over to Discord, to my free Discord chat room real quick. That I'll leave a link to that in the video description. If you're not in there yet, I highly recommend that you click that link and you get in there. I mean, there's tons of other traders in there that you can connect with, that you can share your ideas with, share your charts with us. I also have a entire section in there with educational material that you can study as well, right? So let's pivot over there real quick and let's take a peek at these charts. So you can see I said this morning, bearish on ES at the moment. 1 sec, I will post my analysis. 4-hour trading up into your higher time frame bearish order block. That's what HTF stands for, higher time frame bearish order block. There's your bearish order block. Look at my cursor. See that? That's your bearish order block. That is your higher time frame level. And what have I told you so many times? The best plays, absolutely the best plays, are when you get reactions off of higher time frame levels. That's if you're patient enough. That's if you're patient enough to wait on them. They happen, they repeat, and they're absolutely the highest probability trades when you have that. So 4-hour bearish order block, higher time frame level, right? Also note that 4-hour bullish fair value gap, that will serve as a draw on liquidity. That's what I'm referring to right there. See, 1, 2, 3. They don't touch. The top of the first and the bottom of the third, they don't touch, indicating that there is a imbalance, that there is an inefficiency in price in this area. Hence the name, fair value gap. Price did not have a fair shot of efficiently delivering this section of price, right? So what do you think price is going to want to do? Does price want to leave that area inefficiently delivered? Does it want to leave that area imbalanced? No, right? It wants to come down and rebalance that portion of price action. So that's why I said it's a draw on liquidity. It's going to want to draw down into that and efficiently deliver it, right? So that was the 4-hour. Now I said now to the 1-hour. We got a decent reaction off that 1-hour bearish fair value gap inside the 4-hour bearish order block. That lower purple area is the 4-hour fair value gap, aka your draw. So now it's just displayed on a 1-hour chart. So yes, we traded up into the 4-hour higher time frame level bearish order block, and then this fair value gap was inside of that higher time frame level, right? That, remember, draw on liquidity. It drew up into that. It traded up into a premium. It tapped up into it. Reaction off of that level. And then the 15-minute, you can see it there as well displayed. And I indicated that I think it's going to trade down, draw down into that higher time frame imbalance. And yep, so let's go back to my chart. So here's the order block. All of this is an order block. See that? Here, let me get a trend line. We're going to take the body. So why do I do the body? Because that's where the bulk of the volume is traded. So there's your bearish order block. Look at my cursor again. So we had that big flush, that big displacement lower right there on the 4-hour chart, right? And then once it did that, what did price enter? when we had this move lower, look at my cursor, follow my cursor. We're trading lower, we're trading lower. We're in a what? We're in a discount, right? It's bearish still. No doubt it is bearish. It's 100% operating within a bearish market structure. But when we had this big flush right here, we also entered what is called a discount. And do we want to be shorting? Do we want to be selling in a discount marketplace? No, right? I mean, you could do it profitably. There's ways to do so to trade breakouts, but why? Why do so when you can get something at a premium if you're shorting? If you're shorting, why settle for a entry in a discount when you can get it at a premium? More times than not, what's price going to want to do? It's going to want to retrace higher and give you that premium marketplace, right? So it was short-term cheap right here. And then what did price do? It traded higher. It traded higher back up into a premium. Now, some of you might be scratching your head, Mike, what the heck is a premium? What the heck is a discount? I urge you to watch the video that I made on it. If you just search my YouTube channel, premium and discount pricing, I have an entire video on that. But in short, we're going to take this high right here to the low of the displacement, which is right here. And we're going to find 50% equilibrium of that price range, because that's a price range. 50% is right there. As soon as we traded back up into above 50% equilibrium, we have now entered a premium marketplace. And what do we have in a premium? We have our higher time frame level, right? So we traded up into a premium, tested our higher time frame level, and boom, we had a reaction. Okay, we had a reaction. So we traded up, we completely filled it. We completely filled this bearish imbalance right here this morning during the London session. And then we showed signs that we were topping out. What do I mean when we show signs of topping out? We put in a swing high level right here. See that? We put in a swing high, and then we went down to our 15-minute. Oh, but let me mark that 4-hour bearish or bullish fair value gap as well. We don't want to leave that unmarked because that's our drawn liquidity for a possible PT, right? See that? Price doesn't want to leave that inefficiently delivered. It wants to do so. It wants to rebalance that price action. Now let's go down to the 15-minute. We topped out, and boom, we get a nice displacement lower, right? And then that's where we actually broke the swing low. So, I mean, you might have not got an entry on it if you were waiting for that. But if you were aggressive and you were, say, for example, you said to yourself, hey, we have this reaction, we have this fair value gap off of a larger time frame level. We're in conjunction on all of our time frames. We're completely bearish. And then we have a displacement lower right here, creating a fair value gap. See that? That was that reaction off that higher time frame, fair value gap. And then it popped up into that little smaller time frame imbalance. It rebalanced it completely, and boom, we get a nice move lower. Right, completely rebalances that price action completely. So if you were to short this, what was the setup on it? Well, you could have shorted as soon as it traded up into that imbalance, and then risk the high of the fair value gap. That would, if you were to do that, you would be playing the structure correctly. Your stop placement would be correct because it's above the fair value gap, and then you could have and like, I can't really, it's kind of up to you how you want to play it. Okay, there's different styles. You could be a scalper, ultra scalper, and just look for, you know, a few handles, come down and take out this low right here. You could do that. Maybe take a partial and then let the rest run, and then aim for this imbalance, this drawn liquidity. Also, it was worth noting, we had something else interesting at the beginning of this imbalance. See that? What do we got right there? Right at the beginning of the imbalance. Let's remove it so we can see it a little bit better. So what I'm on is right here. Those are what we would call equal lows. Those are equal lows. And what do we know about equal lows? Equal lows, they don't like to be left like that, really clean like that. They're going to want to get swept more times than not in the near future. And then when we add our other qualities that I've already stated, the fact that the larger time frame is bearish, we have a larger time frame level that we're reacting off of. We traded up into a premium, and then this level is nearby. What do you think it's going to head for? It's going to head for that, right? It's going to head for that imbalance. It's going to head for that. And that's exactly what happened. And this thing just completely dropped off a cliff. And then we had news that further that moved to the downside. So yeah, I mean, just really clean price action on this thing today. Just super clean. It was a nice change from what we have been seeing lately on it. Just really hard price action to read. But yeah, so really, it made for like I thought it would make for a really good teaching session. Just go over higher time frame levels, briefly on market structure, fair value gap, all that good stuff, right? So hopefully you enjoyed this video. If you did, again, I got a link to my free Discord chat in the video description. You can join that if you would like to. 100% free. There's no catch. You click it, you join, you're in. You can share your ideas with us, all that good stuff. And also make sure you leave a like, you subscribe to the channel, and I will keep the content coming.